Hey, Thomas Costelli here again with another episode of Tax Smart Q&A. And in this episode, I'm going to answer the question, are there limitations on the amount of losses you can take if you're using the short-term rental loophole or the real estate professional status? Before I break all of this down, if you do like this video, make sure to hit that like button to help get the video into the hands of more real estate investors and help them become tax smart. So the question is, are there limits on the amount of losses you can take if you're using the short-term rental loophole or the real estate professional status? And the short answer to that question is yes, there are limits. These limits are known as the excess business loss limits. And what the excess business loss limits state is that you can only take a maximum of $270,000 or $540,000 in 2022 against your non-business income. And this is indexed for inflation, so this will go up each year. And so what this basically all means is that you could take unlimited losses against your business income. So if you have an operating business and you're using a short-term rental loophole or real estate professional status, you could take unlimited losses against your business income, no problem. But if you're talking about W-2 income or income from capital gains or dividends from the sale of stocks, bonds, etc., or virtually any other non-business income, there is a limit. And so let's just give an example, right? Let's say that Sally, right? Let's meet Sally. Sally earns, she's single. She's a single taxpayer. She earns $1 million per year. And she has a short-term rental property. She uses the short-term rental loophole. She generates a massive loss. This loss is $400,000. Okay. And remember, she has $1 million of W-2 income. So that's income that is not business income. And she has a $400,000 loss. And remember, she's single. So she can only take, because she's single, a maximum of $270,000 of that loss from her short-term rental activity against her W-2 income. The excess loss, the remaining loss, I think it's around $140,000 if I'm doing my math correctly. Yeah, it's somewhere around there. That's going to be carried forward into future years. And that's going to be used to offset her income in future years because it's basically carried forward as a net operating loss. And later on, that can help her offset her income in future years. But the point is, she will not be able to take losses in excess of that $270,000 because her income is from W-2 income and is not business income. In summary, you can take up to $270,000 of losses if you are single or $540,000 if you are married against your non-business income. If you have losses in excess of that amount, then they're going to be carried forward into the future as a net operating loss and can offset your income in future years. But unfortunately, you may not always be able to offset your income completely in the year you have these big losses, thanks to these excess business loss limitations. So do you have questions about the excess business loss limitations? Go ahead and drop them in the comments below, and we'll go ahead and answer as many of them as possible. That's all for today, and we'll catch you on the next episode of Tax Smart Q&A. Oh yeah, one more thing. How can I forget? Don't forget to hit that subscribe button to make sure you don't miss out on future releases.